Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me as always is Shreyansi Singh. Shreyansi, wishing you a very good morning and good moves coming in for the global markets as well, especially Wall Street because, S&P and Nasdaq have notched fresh highs, so good stuff going on at least on Wall Street. So take us through what's been happening over there.
Well, absolutely, and it's very interesting what we're seeing play out with the Wall Street because right now on futures you're not seeing much of a move there, but then of course for Wall Street you did have quite the interesting moves coming in. So let's take a quick look at what we really saw happening. Of course, this is a data heavy week, so that is also something that we're watching out for. But when you look at stock futures, you're looking at them inching down just a little bit, and that is of course as this is of course the lead up to June's Federal Reserve policy meeting as well. Now of course a muted but notable day because S&P 500 and Nasdaq, like you mentioned, Snehi, rose modestly to notch new record closes. When you look at Dow, then that inched higher by nearly about 0.2%, and this comes as traders prepare for the two-day Fed policy meeting as well, and all eyes are definitely going to be on that because the meeting will be concluding on Wednesday. This is of course a meeting that everybody has been keeping an eye on, and this of course has an interest rate policy decision and a subsequent press conference featuring Jerome Powell, and whatever his commentary is extremely important then. And let's also take a look at what else investors are waiting for. Now of course the meeting also has investors anxiously awaiting the policy announcement, but they're largely pricing in that the borrowing rate remains unchanged. Now when you look at Fed funds futures, they were indicating virtually no chance of a cut at this week's meeting according to CME's Fed Watch tool. Before the Fed decision, investors will also be analyzing small business data due out Tuesday. Like I mentioned, a little bit of a data heavy week with a couple of important data sets coming in. So the second one and the second piece in this puzzle will be the consumer price index reading for May expected in the morning on Wednesday. And on the corporate earnings front, then you have Oracle reporting its numbers as well as Rubrik that is slated for after the bell on Tuesday. So that is key to watch. Now of course in Europe we did see quite the potboiler sort of play out, and European stocks closed lower, and no points for guessing that because you did have that announcement coming in for snap elections, and that of course indicates that there's a little bit of political uncertainty there, and that of course is something that we saw both in DAX as well as CAC. So when you take a look at what the DAX did, you're looking at declines of about 0.3% coming in for DAX, and when you look at CAC as well, similar moves coming in there as well. So very important to see how it really pans out for Europe then, Snehi.
Absolutely, very key political events taking place in Europe right now. Very interesting events to watch out for, so we'll keep a very close eye on that as well. With that, let me also take you through what's been happening in the world of commodities. Let's start by looking at what crude oil is up to. Crude oil futures rose more than 2% yesterday as analysts see summer fuel demand pushing the market into a supply deficit in the coming weeks. Now, Goldman Sachs analysts have said that Brent should rise to $86 per barrel in the third quarter as summer transportation and cooling demand pushes the market into a sizable deficit of 1.3 million barrels per day. Now, the WTI July contract is at $77.7 a barrel, up $2.2 or almost 3%. And on a year-to-date basis, US oil has gained 8.5% as well. Brent August contract at $81 a barrel, up almost $2 a barrel or 2.5%. And year to date, the global benchmark is ahead 6%. But while these are futures of the months going ahead, let's also take a look at what the spot basis is doing. And WTI at 77.8, Brent at 81.7. So good moves coming in on both of these indices, WTI as well as Brent crude. Now remember, oil prices posted a loss last week after the OPEC Plus agreed to increase production from October through September 2025. Now this Goldman sees a $75 floor for Brent as lower prices promote demand and a $90 ceiling due to higher than expected global inventories and the OPEC Plus production decision. Traders are looking ahead to oil market reports from the OPEC and the International Energy Agency, which is the IEA, today and tomorrow as well. So that's all that's been happening on the oil front. Let's switch focus and talk about what gold is doing, because gold prices have also rebounded yesterday after the precious metal's biggest daily drop in 3.5 years in the last session as investors awaited US inflation data and the Fed Reserve's decision on interest rates tomorrow. Spot gold was up 0.7% at $2,326.2 per ounce. So that's where gold is doing. So, well, yes, in a nutshell, that is what oil and gold are up to, Shansi.
Well, absolutely, Snehi. So over 3% declines were the move that we saw yesterday for gold. So quite the important move coming in there. But let's get tracking the top stories this morning, why don't we? And the key announcements and launches from Apple's Worldwide Developers Conference. A significant event for the company as Apple amps up its presence in the artificial intelligence circuit with Apple Intelligence that prioritizes practical features enhancing user experience. Now, among other key announcements was of course the next generation operating system for Vision Pro OS 2 4 months after it first launched Vision OS. Vision Pro will also be available in China, Japan and Singapore. And the biggest release this year, the iOS 18, in addition to wallpapers, icons, widgets, as well as users will also now be able to arrange apps and widgets to frame their wallpapers better. Finally, the Apple iPad gets the much awaited calculator app as well. So a lot of important moves coming in there.
Absolutely. Let's keep it with Apple then, because after months of speculation, Apple has finally revealed that it's integrating ChatGPT access into its devices, the likes of iOS 18, iPad OS 18 and Mac OS Sequoia, allowing users to access its expertise, its image and document understanding capabilities and more without needing to jump between these two tools. Now, the company has categorically said that privacy protections are built in when accessing ChatGPT within Siri and writing tools. Users will have the choice whether to use ChatGPT in its apps or not. In a reaction to the announcement, Elon Musk has threatened to ban iPhones from all of his companies. In a series of posts on X, he wrote that if Apple integrates OpenAI at the OS level, Apple devices would be banned from his businesses and visitors would have to check their Apple devices at the door where they'll be stored in a Faraday cage.
Well, that is an important announcement coming in there, but shifting focus to some important commentary from the central banks. ECB interest rates are not on a linear downwards path and policymakers could at times wait more than one meeting before cutting them again. And that's the word coming in from the central bank president Christine Lagarde. Remember, last week ECB cut rates from a record high but held off committing to any more policy easing given stubbornly high wage growth and yet another increase in inflation projections. Now, markets are pricing in little more than one rate cut over the 4 meetings left this year and also see between 3 and 4 reductions through the end of 2025, so in the next 12 policy meetings.
Alright, interesting commentary coming over there. Let's keep it going with central banks because according to the New York Fed Reserve survey, the US public's outlook on the future path of inflation was mixed in the month of May. The report shows that the public believes inflation a year from now will be at 3.2% compared with April's expectation of 3.3%, while 3 years from now it is expected to be held steady at 2.8%. 5 years from now, the survey respondents see inflation at 3% from April's projected 2.8%. The report comes just ahead of the start of this week's FOMC outcome, wherein officials are expected to keep borrowing rates unchanged between 5.25 and 5.5%.
Alright then, those were your global updates to go with your morning cup of coffee. But when we come back after a short break, we'll take a look at how the Asian markets are faring, so you don't go anywhere.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Thanks so much for staying tuned. Now, Modi 3.0 has already started working on big bang projects with the extension of the PM Kisan Samman Nidhi scheme and retaining the 4 core ministries with the BJP. So we caught up with the Fiji President Anish Shah on the key focus areas of the new term. He also talks about India's capex situation and what is expected to change on that front. Here's an excerpt of that chat.
Stability is important and that helps a lot. We've seen a number of positives over the past few years, and the positive is really around focus on long-term growth. It's something that we've commented on after every budget as well, as compared to focus on SOPs and incentives, because long-term growth is a greater multiplier. So that's the first thing we would hope it continues, especially given coalition politics now. The second that we hope is around 4 specific areas. First is Make in India for the world. And for that, we need to have an even lower cost of manufacturing in India. We need to have a much higher quality of products, and India should be known as a high quality of products country. And there's been a lot of work done on ease of doing business. That needs to continue going forward. The second set of areas is around farm prosperity and ensuring that we can create a value chain that's a seamless and efficient one where you reduce wastage significantly, have a much fresher produce for consumers, increase farm productivity, because that way we can do more with less. The third area is around women-led development. That's an important area for our country, to have more women in manufacturing, more in the labor force, and really focus on equality. And the fourth area is around sustainability, sustainable infrastructure for cities, water positivity across the country, and really playing a much bigger role in creating a green economy, which will be helpful from a climate change standpoint. So these are the 4 main areas that we look at: manufacturing or Make in India for the world, farm-led prosperity, women-led development, and sustainability.
But this time government is different from 2014 and 19, that this time it's a coalition government. Earlier were also, but this time it has been made with partners. Do you think it's going to somehow put pressure on the government, delay decision making? Anything you think on that terms?
We feel fairly optimistic at this point that given the ideologies that the parties have and the fact that the government has gone through the last 10 years, in fact, they will be on a solid track and really can help drive decision making and continue on the path that they've been on.
And budget is just around the corner, as we expect within a month or maybe a little delayed. Budget will be there. Last time it was clearly an interim budget, so not many decisions could be taken. This time we expect, again, what are your big hopes, the road ahead with the budget?
Our hopes are that what we've seen over the last few budgets continues, which is the focus on long-term growth, the focus on investments that have a greater multiplier as compared to incentives and SOPs, and that's going to set up the economy well for the longer term. Recognize that India is very well positioned right now. India will add more GDP to the world than will the European Union in the next 6 years. And if we continue on track, India will likely be the largest contributor to the world GDP by 2028. So we are on a on a path that is actually a very good path. It's about staying the course, it's about implementing, continuing to focus on the long term, but more importantly, driving an inclusive growth agenda. That's one that I think is more important, and I'd look at a greater focus there. We've seen some actions today already that really point towards that, and that's a positive step forward.
And whenever elections come, definitely this time also, jobs was a big issue. And what are the suggestions from the side of India Inc., from FICCI, that jobs, more and more jobs are created as it is definitely needed by a country of our size?
CapEx will lead to jobs. So government CapEx has been fairly strong for the last 2 or 3 years. Private CapEx needs to step up and get stronger. And that will help manufacturing to grow significantly. To meet our Viksit Bharat goals, manufacturing has to increase 16 times in the next 23 years. That will automatically create jobs. But for that, we need to continue on this path of a longer term investment horizon.
Alright, then that was the word coming in from Anisha. Let's move on from that conversation. And no major surprises have come from Modi Cabinet 3.0. PM Modi retains Amit Shah, Rajnath Singh, Nirmala Sitharaman as well as S. Jaishankar in their previous roles. Nitin Gadkari and Piyush Goyal also retain key portfolios. A key addition is JP Nadda, moving from his position as party president to Health and Fertilizer Ministry. We're also seeing allies getting their share of the pie as well. Let's go across to Prakash Priyadarshi, who's standing by with all of the important details of the key portfolios. Prakash, tell us what the list looks like.
Yes, finally the wait is over with the distribution of key ministries to the ministers, and a significant development as well. The BJP has managed to retain the key portfolios despite being in a coalition government. The BJP has retained the CCS ministries, which comprise Ministry of Defense, Ministry of Home, Ministry of Finance, and Ministry of External Affairs. Nirmala Sitharaman has managed to retain a key portfolio that is Ministry of Finance and Corporate Affairs. Along with that, when it comes to other key portfolios such as Ministry of Petroleum, once again, it has been given to Hardeep Singh Puri, who had been Ministry of Petroleum in the Modi government 2.0 as well. Along with that, Nitin Gadkari is going to retain Ministry of Road Transport and Highways. Ashwini Vaishnaw will also, he's also going to head the key portfolio that is railways. In fact, he'll retain railways along with Ministry of Information and Broadcasting. There's a surprise element as well, as the health portfolio is going to be headed by JP Nadda, the BJP president, along with Ministry of Chemicals and Fertilizers. Along with that, Shivraj Singh Chauhan, another heavyweight of the BJP, is going to handle Ministry of Agriculture and Farmers along with Ministry of Rural Development. Moving ahead, when it comes to Ministry of Housing Affairs and Urban Development, that will be headed by Manohar Lal Khattar, along with another key portfolio that is Ministry of Power. S.D. Kumaraswamy will handle Ministry of Heavy Industries along with Ministry of Steel. Piyush Goyal, another BJP heavyweight minister, he'll handle, in fact, he'll retain Ministry of Commerce and Industry, but when it comes to textile and consumer affairs, that will be taken away. Along with that, Dharmendra Pradhan will retain Ministry of Education. Rajiv Ranjan Singh from JDS, he'll handle Ministry of Panchayati Raj and Ministry of Fisheries. Jitaram Majhi, MSMEs. Sarvanand Sonowal, he'll retain his portfolio, that is ports and shipping and waterways. So these are the key portfolios which have been allocated to the ministers. They'll start taking charge from today itself, and will start working on 100-day agenda.
All right, Prakash, thanks so much for briefly taking us through what the new cabinet is looking like. But what does this mean for the markets, and what's the market's reaction to this going to be like? Listen in to ET Now's editor-in-chief Nikunj Dalmia's take on just this.
While the election cycle has changed, it may be called as a coalition sarkar, but from a government standpoint, from a market standpoint, what is important is that it is going to be pretty much an extension of what good work we've seen in last 10 years. So from a market standpoint, market should take mighty relief. The concern in the market was that first, will coalition politics have an impact on the economic growth? I guess that looks unlikely. The compulsions of the coalition, if one really looks at the top ministerial berth and the key ministries, the compulsions of coalition are not getting captured in the current allocation. The fact that the Home Minister, the Defense Minister, the Finance Minister, the Railway Minister, all of them, in a sense, have been given an extension of their portfolio. It is a clear endorsement by the Modi government and by PM Modi himself that they really want to keep the ball rolling. Each ministry, if you really talk about it, I think there have been some big achievements in the Finance Ministry, by the Home Ministry, by the External Affairs Ministry. What it means is that the election cycle has come and gone. The center stage and the narrative may be Mili-Juli Sarkar or Coalition Sarkar, but from a market standpoint, nothing changes, and that, I think, will be a mighty relief. See, I think large part of the election surprise, I think, is something which already has got adjusted. We saw that shocking Tuesday, and after the shocking Tuesday, we've seen a comeback on Wednesday and a magical Friday, followed by a stable Monday. So from a market standpoint, what it means is that the recovery, what we've seen on hopes of continuity, that only gets endorsed more and more. That clearly means that if you really look at the hallmark of, and I'm purely talking about the finance ministry here, if you look at the hallmark of Nirmala Sitharaman's tenure, it is implementation of GST. How the Indian retail investor, in a sense, was able to understand how tax rates they came down. We saw massive surge in the SIP business. We saw a great ease of doing business when it comes to the tax regime. We clearly could be in for more of the same. I think what it also means that from a market standpoint, the big theme, which is capex, energy transition, focus on EV, semiconductor, building new India, road infrastructure, which in a sense has been really driving India's GDP and India's growth. I think that will continue. What is important for us also to point out for our viewers is that this current portfolio allocation does not spark out what could be called as a coalition compulsion. So coalition compulsion, which was a fear from the market, that takes a backseat, and market stability and continuity comes back in terms of an center stage.
All right, then that was the word coming in from ET Now's editor-in-chief Nikunj Dalmia. Let's also get you some more commentary on this. Then we also caught up with Sanjeev Srivastav, who's a political commentator. Listen into what he had to say as well.
Mr. Modi cannot and will not forget that he has got 240. So he will look at the reasons why they have got 240 and not 300 or 300 plus. And there will be challenges that will come along the way, like in the run-up to Haryana elections. They may think about tinkering or tweaking or changing the Agniveer policy, which would mean that you would have to allocate some money for some kind of a revision. So some going back to some push back into welfareism will also be a challenge as Nirmala Sitharaman goes ahead preparing her budget, which should come out soon. I think that will be the biggest giveaway of this government, or the biggest signal which we will be able to read as to what kind of a balance between reforms and welfare measures is this Modi 3.0 going to attempt or set their target for.
All right, well, let's just focus and talk about life insurers, because this entire sector is going to be in focus on the back of premium data. Premium for the first year insurance holders have surged 15% with a strong show from LIC and ICICI Prudential. Anurag Shah is joining us with all the highlights of this data. Anurag, take it away.
Good set of numbers shown by life insurance industry in month of May. As per the data released by Life Insurance Council, life insurance industry in month of May has shown a growth of 31% up to the month of May. Otherwise, if we talk about the only month of May, then premium growth is 15.15%. So if we talk about the listed players in the life insurance space, then ICICI Prudential has shown a growth of 31% in month of May. If you talk about the first 2 months, that is up to the May month performance, then ICICI Pru Life premium has gone up by around 10%. Another listed player, HDFC Life, has also shown a very good performance in month of May. HDFC Life premium has increased by 14% in month of May, and up to the month of May, the premium is up by around 10%. SBI Life has disappointed in month of May. So in month of May, SBI Life premium is down by 2.5% as compared to the last year 2023 May. So premium stands at 2,354 crore against the 2,414 crore in May 2023. Biggest player in life insurance industry, LIC, has also shown a good growth. If we talk about the data of up to the month of May, LIC has shown a growth of 46%, and in month of May 2024, LIC's premium is up by 18.74% as compared to the premium LIC earned in May 2023. So good set of numbers by life insurance industry in May 2024.
All right, thanks Anurag for that update. But while you're with us, IRDAI's groundbreaking Bima Sugam project is also set to be incorporated as Bima Sugam India Federation, and it's likely to have an initial corpus of 200 crore from the insurers as well. So tell us a little more about that as well then.
IRDA's much awaited insurance platform Bima Sugam will be incorporated as a Section 8 non-profit company, and it will be named as a Bima Sugam India Federation. So filing of this name has been done, and the interim board has been set up, and the process to appoint MD and CEO of the Bima Sugam is also near completion. So progress is on fast track to launch Bima Sugam platform, and IRDA has set a timeline to launch this platform in April 2025, which will be date of completion of IRDA's 25-year also silver jubilee of IRDA also. The first phase of Bima Sugam will go live in April 2025. All insurance companies will put in money for this platform. Initially, the corporates will be around 200 crore. This company will be headquartered in Mumbai only. A Section 8 company, non-profit company, which will completely democratize insurance in the country, from buying insurance to selling insurance, servicing of insurance. All insurance related stuff will be done by Bima Sugam platform. It will be called as the Amazon of insurance, a one-point solution for all insurance needs. So there is so much of progress related to the Bima Sugam platform. Company has been set up as a Section 8 non-profit company.
Well, all right, Anurag, thanks so much for taking us through all of those details. Lots to watch out for when it comes to the insurance front, Shansi. But with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news in action and the stocks that you should be specifically watching out for in today's trading session when we return. So you stay tuned.
Well, we'll get a little stock specific now, but before we do that, we have Anshu standing by with the futures and options roundup to tell us how that is shaping up. Ansh?
Right, so let's start with what FIS and retail did in the previous session. So FII and index future have added around 16,500 long contracts, and they have covered around 32,000 short contracts. And this is the fourth session when we have seen them covering their short position. With this, the total short has come down by 54% in 4 sessions, from 3.1 lakh contract directly to 1.4 lakh contract. So FIs seem getting a bit positive here. But if we talk about retail traders, then they have been cutting their long positions, and their net long is down by around 65% in 4 sessions. So they are getting a bit of bearish here. So FI getting a bit of bullish, retail traders are getting a bit of bearish. So there's a neutral stance in the market. The same was seen in Nifty as well. So if you can see the Nifty chart, then in the previous session, Nifty has actually touched all-time high level, which is positive, but then it snapped its 3-session gaining streak to close in red, which is bearish. So again, a neutral stance in the market. If we talk about index futures, then we are seeing that open interest dropped by around 6%, which is a bit of a long unwinding, which shows a neutral stance in the market. Whereas on option front, we are seeing call writing happening at a 23,500 mark, indicating strong resistance around this level. Moving on to Nifty Bank. Nifty Bank too snapped its 3-session gaining streak to have a neutral stance in the market. Index future as well, we are seeing that open interest has dropped by around 6%, same of that of a Nifty as well, showing a trend of long unwinding, which is a bit of a bearish sign. Whereas on option front, we are seeing call writing happening at that psychological mark of 50,000, indicating very strong resistance around this level. Also today we have Fin Nifty option expiry, so keep an eye on banking stocks.
Thanks so much for taking us through that. Lots of important stocks to watch out for. But let's keep it going with that. And my colleague Jinay he's joining us with a list of all the stocks that are going to be in focus on the back of their individual news flows. Good morning, Jinay. Take it away.
Yes, good morning. Well, the first stock you need to keep your eyes on is on the back of block deals, which is Indigo. So Bhatia family unit of Indigo is going to sell around 2% stake worth around rupees 3,293 crores, and the base price for this deal is going to be 4,266 per share, which is trading at a discount of around 7% from the current market share. Also keep your eyes on IRB Infra, as Cinta is looking to sell up to 5% stake in the company via block deal, and the deal price for this deal is going to be in the range of around 63.7 to 70.16 per share, which is trading at a discount of about 10% from current market price. Moving on, keep your eyes on NLC India, as company has got an approval to raise funds via ECBs in any foreign currency to the extent of about $600 million, and also the company has got approval to invest about 995 crores in one or more tranches in the NLC India Renewable Limited. Moving on, Raymond is again in focus today, as the company has got another redevelopment project in Bandra East. The revenue potential from this project exceeds more than 2,000 crores. And lastly, keep your eyes on RVNL, as company emerges L1 bidder for a central railway with a cost of around 138 crores. And also Siemens RVNL JV has got a letter of acceptance from BMRC for a project cost worth around 395 crores. So these are all the stocks which will be in focus today.
Absolutely. Thanks, Jinay, for that roundup coming in. So that was a list of stocks that will remain in focus. And adding to that, we also have Elara Securities that will remain in focus. HCC, that will remain in focus on account of that Elara Securities note, where they've initiated coverage on HCC with a buy rating. Gaurav is standing by with the takeaways. Gaurav, poised to
Well,
reclaim lost glory is something that they're talking about. Tell us a little more about the key takeaways then.
Right. So Elara is coming up with an initiation note on HCC where they are given a target price of 63 rupees, which leaves a healthy upside of around 60% on the current market price. What they believe is that company, after a decade and a slew of measures like debt restructuring, dispute settlement and non-core asset monetization, company is actually ready to flex its muscle is what Elara is saying. What they believe is that company has 10 decades of experience to capture the 1.5 trillion rupees opportunity in the nuclear market, because if you look at the market, company already has 60% share in India's civil nuclear power capacity. Apart from that, they are also expecting peak consolidated debt to reduce almost by 71%. That has already reduced by 71% to 3,500 crore rupees, 35,000 crore rupees by FY24. They are expecting net worth to actually turn positive for the company in FY26, and from there on we may see the growth compounding at 15% CAGR. What they are expecting for FY25 is that we may see 9,000 crores of order inflow versus what the company had guided at 10,000 crore rupees, and we may see 15% CAGR growth from there on. And lastly, partnership with PE investors will actually help the company in their long-term projects because this will leave less strains on the balance sheet. So all in all, Elara is being very bullish on HCC with 60% upside from the current market price. So definitely watching out on how it pans out for investors of HCC.
Alright, Gaurav, so HCC is going to be in focus today, but I believe you also have a list of other stocks that are on Brokerage's radar this morning and the stocks that are going to be focused on the back of these brokerage notes. So take us through that list as well.
Well, yes. Then let's first begin with Sun Pharma because Macquarie is being a little bullish on this stock. They have actually maintained outperform rating with increased target price of 1,685 rupees per share. What they believe is that this stock is actually a consistent compounder. We may see some continuous improvement in earning because of the mix which is shifting towards the branded business. Apart from that, they also believe that the company has strong balance sheet and net cash flow which actually offers them to acquire more businesses from here on. Next, let's talk about ONGC because now Jefferies has reiterated its buy rating with a target price of 390 rupees per share. We have recently seen that the stock was down, and this actually provides a opportunity for investors to buy as per Jefferies. What they believe is that ONGC's profitability is likely to stay elevated from here on as well, and there are a few triggers like ramp up in the KG Basin from KG Basin production from 3Q FY25, and apart from that, the accretion to profitability are the key triggers for the company which will actually help them keep the profitability elevated from here on as well. Lastly, let's talk about GAIL because we know that company is intending to set up 1500 KTA ethane cracker project, and now brokerages have reiterated their view as well. So JP Morgan has maintained its neutral rating with a target price of 184 rupees. What they believe is that this is too early to worry about the cash flow because of this project. They believe this project is likely to be 4 times the EBITDA to OCF for the company, but this project is likely to complete in 2030. And lastly, if you look at the target price which JP Morgan has given, they believe that the valuation leaves a little room for upside. But apart from that, if you look at Morgan Stanley, they are being bullish on this company. They have maintained buy rating with a target price of 250 rupees because they also believe that this project is likely to start in FY31. And lastly, GAIL is diversifying its livestock, which can actually help the company with its profitability. So all in all, definitely watching out on these companies as well because we are seeing a strong words coming up from brokerages on these companies.
Alright, Gaurav, thanks so much for taking us through that. Let's keep it going with some more brokerages this morning. And next up is a note from Morgan Stanley on Tata Chemicals. They're underweight on the stock with a target price of 843 rupees per share. They believe that the share price will fall relative to the country index over the next 45 days. And they estimate that there is about 80% or more probability for this scenario to happen. They believe that Tata Chemicals should see subdued soda ash earnings in FY25 and well-supplied soda ash markets, mixed demand sentiment and unfavorable competitive dynamics are at play for Tata Chem as of now. They see soda ash margins reverting to below mid-cycle levels as well, and valuations are also tracking near more than 1 SD and they appear rich for the company. But well, yes, they believe that the stock price is going to fall relative to the country index in the next 45 days. That's the note from Morgan Stanley on Tata Chemicals this morning.
Well, absolutely, and let's also take a quick look at BofA's India strategy then, and they see scope for continued capex momentum. They're talking about how NDA policies have been pro-reforms, and they're saying that capex and populism can coexist, and that is something that they see happening. Now, they're also seeing scope to step up leverage for capex as well. And in terms of capex, they've also talked about how repurposing of capex mix is something that they also see that is likely, and they also continue to prefer investments over consumption. So that is the word coming in from BofA. And let's also take a quick look at the rest of their strategy in terms of sectoral calls. They've moved staples to market weight, and they see low potential for staples to outperform. They've also gone ahead and trimmed the weightage of the industrial sector, continue to favor financials, autos, cement, as well as non-ferrous metals. So that's the word coming in from BofA as well.
All right, well, lots happening, and in terms of brokerage notes, lots of sectors to watch out for, and stocks as well. But we'll leave you with that on this edition of Market Cafe, because while we bid you goodbye, you stay tuned to the channel, because the market takes all the action ahead. But it's a goodbye from Shreyan Seeley and the entire team that put this show together. Thanks so much for watching.